And she's counting. Hey, I'm here with Melanie with One Stop Tax Strategists here today to talk about short-term rentals and some tax strategies. So, Melanie, thanks for joining me. I appreciate you.
Of course, I got construction going downstairs, so hopefully I have a good mic and you can't hear that.
Yeah, I don't hear the saw going. We're good. I
Good.
uh, I appreciate you hopping on. Let's get right into it. Let's talk about short-term rentals. How What are some tax strategies for people who own short-term rentals, especially if they're a W-2 employee versus a real estate investor? Can you give us some tips and tricks there?
Yeah, so I guess overhead overview of the real estate investors versus somebody with a W-2. Real estate investors, if you're a full-time real estate investor, that means you're doing 750 hours or more in real estate related activities and you do real estate more than anything else, then you can qualify. Basically, it turns your passive income into active income or passive losses into active losses. So there's a lot of benefit there. People that have W-2s, we get a lot of people that come to us with just maybe two spouses have W-2s, or it's just a single person and they have a W-2. And so they want to know, what can I do to offset my W-2? That's where the short-term rental comes into play. If they self-manage a short-term rental, then and they do, there's like we can go over the rules of that, but they're allowed to take advantage of those same opportunities that the full-time real estate investor has without doing that 750 hours. And so it's only 100 hours of material participation. And there's a lot of little things, intricacies that you have to make sure that you're not going over. But overview, you can take advantage of those same activities and take all your passive losses, passive income, and turn them into active losses against your W-2. So it's really a great opportunity for people that can't take advantage of the real estate professional status.
I think this is an absolute game changer at Synergy Stays. A lot of our clients do self-manage, and we take care of the revenue side of things for them. And this is an absolute game changer because there are so many people who do have one, two, three short-term rentals, a W-2 job,
Yeah.
and they get to use the same tax advantages as a lot of the wealthy people. That real estate investors have the most tax incentives. Is that correct?
That's correct. Yeah, for sure.
So, yeah, no, I appreciate you hopping on. Anything else people should know? Any other tips, tricks when it comes to either short-term rentals or anything new going on in the real estate business that you're excited to tell us about on your end?
Yeah, so I'll just go over some questions, kind of the basics of the short-term rental loophole. A lot of people ask that. So pretty much a short-term rental is defined as any rental with an average stay of 7 days or less, or up to 30 days if you provide significant services. Like if you treat yourself like you're a hotel, like changing your linens out, cleaning the rooms daily, providing those types of services, and you can maybe go above the 7 days or less. But I would just stick around that 7 days or less. If you don't use the property personally over 14 days or over 10% of your average stay, and it's not considered, basically what that does is it allows it to not be considered a rental activity under the IRS rules. So to make it easy, you can think of like your W-2 income or any business income as your active income bucket. And so for me, I run our tax firm, and so that's my active income bucket. I technically wouldn't qualify as a real estate professional because if I had a rental property, that would be a passive bucket because I don't have the 750 hours in real estate. And so the short-term rental allows, like if I bought a short-term rental and I self-managed it, I would be able to do the cost segregation study, that accelerated depreciation, and I'd be able to offset that loss against my W-2 income. So as a quick example, let's say we have Emily, she's a nurse practitioner. Her W income is $300,000. So her federal tax bracket's about 35%. Let's say she buys a short-term rental, say it's a beach house, $600,000, and she self-manages it, materially participating in it. So that means she manages the guests, messages them, handles the turnovers, does basically more than anybody else managing that property. Doesn't mean she has to do everything. It just means she has to do more than anybody. And let's say she does that cost segregation study, and I can go over what that more is in detail if you want me to. But that would basically create $120,000 loss as an example against in year one against her W-2 income. So that would take away $120,000 of income that should be taxed against and offset those taxes. So the savings in that example at a 35% tax rate would save her about $42,000.
See, this is why it pays to invest. Not only do you get the cash flow from the rental, you also have the potential tax savings. I mean, that's
Yep.
that's absolutely amazing cheat code to helping to build wealth and keep it in your bank account, not in the IRS's hands.
Oh,
But
yeah.
yeah, why not talk quickly about? I think that's good to educate people on if they don't know what a cost segregation study is. I think that'd be good that you can talk about.
For sure. Yeah, for sure. So if you look at like a property, there's going to be pieces of that property that are depreciated over, let's say, 27 and a half years. And so a cost segregation study is a study that they send an engineer in there and they break apart all the different pieces of the property. So appliances depreciate over 5 years, flooring depreciates over 7 years, landscaping's over 15 years. And so they take all those little pieces and they shove that all in the first upfront year. So instead of depreciating over 27 and a half years, they can depreciate that in 3 to 5 years. And so it just basically offsets a massive amount of taxes by doing that.
Yeah, and I heard they're gonna possibly bring back bonus depreciation. So
I think
we'll see
it'll
if that
come back, but we'll see. It's all a crystal ball at this point. That'd be amazing. I know that they're pushing towards, I wouldn't be surprised at the minimum if 50% comes back, but it would be amazing if 100% comes back.
Yeah, that would be awesome. So anybody out there need an awesome tax strategist or a company to help you out with your taxes or just helping you keep more money in your pocket, highly recommend Melanie and One Stop Tax Strategists. They are amazing, super intelligent, smart at what they do. They know all the tips and tricks of the tax code. They nerd out on it. They love it. But I just want to say I appreciate your time. Thank you, Melanie.
Of course.
All right. Cheers.
Cheers.